So you take everything as a whole, right? How confusing was everything I just said? And some stocks are down 40, 50%. Others are up 100% over the past 8 weeks, 6 weeks. Confusion over the data, every piece of data. I mean, you're seeing productivity go down to levels not seen in the history of our market, yet we're seeing inflation continue to go higher where output costs, right? That was just released, going higher due to inflation. Gave us a number that we've never seen before in the history of that data with productivity. Again, the CPI is high, unemployment, again, that rate's pretty good, but yet housing's dropping off a cliff all over the place, and it's nuts. We have clear positives and clear negatives where bulls and bears, both sides of the aisle, have lots of data points to support their thesis. And you're looking at it going, holy shit, this is confusing. I don't know what the hell's going on here, but this is more confusing than it's ever been. I get it. But there is good news here. Over my 30-year career, the best market environments usually happen when you have a healthy mix of both bullish and bearish indicators and investors. The problems happen when everyone leans to one side or leans to the other side. That's when you see the problems happen. Because it always overshoots. It's better to be in the middle. When you're in the middle, it usually chugs along and it's pretty good. And you got a little volatility here and there. We're going to see volatility since the Fed's raising rates, can continue to raise rates through September. Let's see what happens based on the data today. They better stop after a 50 basis point hike in September. If that changes over the next month, that's different. We see a massive CPI number, we see unemployment, that's different. Maybe you go 75 basis points and say we might continue. But if we continue to see these prices and housing, I mean, everything tail off the way it is, even worse, we're seeing that right now. We're seeing prices come down in a lot of places. Retailers sitting on more inventory than they sat on in probably a decade, which they're going to have to sell at cheaper prices. That's inflation. Data that I track for supply chains, they're saying that demand is slowing. You have crates sitting on their lots now for 8-9 days. But they're starting to charge these companies. You didn't see that for a very, very, very long time since they started injecting money into the system. That's easing supply chain concerns because you're seeing demand fall. That's what they're reporting. This is the data that's been tracked 25 years. We have access to. Again, it's not biased or anything. These are just the facts. But having this split environment, guys, is a very, very good thing. Even though it's confusing and you're like, I don't know if we're inflated, I don't know if we're not. It's very difficult to forecast your business or how much you want to spend. There's companies removing their estimates right now going, I'm not too sure what to do. Let's just wait. I don't know what the Fed's going to do. If they're going to raise rates, it's going to result in more and more people. Their bills are going to go higher and higher. Expenses are going to go higher. They're going to be able to borrow less. That could result in less demand, fewer customers. So let's just, be careful with our guidance. I get it. But during those times, especially as we see with the Fed being on the right side of the trade now, remember, uncertainty is the death of equities and stock. When you have uncertainty, you don't know what's going on. That's why it went down 11 out of 12 weeks. The uncertainty of the Fed completely doing about face going, they didn't know what was going on. Holy shit. We're totally wrong. They're not wrong now. They're not wrong now. Today. Again, we're talking about today. Forget about it. You want to talk about the Fed, how terrible they've been? Fine. It's useless, basically. It's not going to make you money telling you how terrible the Fed is. What's going to make you money is seeing what the Fed's going to do going forward. Going forward, they're going to raise rates. I just think it's going to be a lot less. But if they go even higher and they go to 3.5 or higher, look out. I think 3% is perfect. Let's see in September. But at least the Fed's on the right side. That's important. Where we all see inflation now, not the whole entire world, and the Fed didn't see inflation like it was, right? The Fed was the only person that didn't see inflation. I guess they don't pay their bills. I have no idea. They didn't see inflation coming. Now they do, and we all do. Then we have Bullard and a lot of these other Fed presidents going crazy, 4%. That's what you want to see. You want to see them nervous, holy cow, nervous on that side, not the other side. There's no inflation. We're going to be fine, right? That suggests bullish market conditions. And then when you do an about face, what happens? The market crashes. Totally gets destroyed. We've never seen that. 11 out of 12 weeks we were down. Never saw that in the history of the markets. That's how terrible it was. Now they're on the other side. Inflation. Holy cow, we got to worry about that. That's where you want them to be. This way they see it and they're concerned and they can do things about it. And they can also ease back where the Fed had no choice but to say, we need to shrink our balance sheet right now and raise rates incredibly fast, at the fastest rate that we've seen in over 30 years, close to 40 years. We're not there anymore. So when you see this back and forth, the confusion, it's almost like when we have a split government. When the Democrats, Republicans hold power in all three branches, those are usually the best market conditions because you don't have, idiots on either side passing radical agendas, which we're seeing right now. And we saw that with Republicans. So they're pushing everything through before November because it's not going to be that way anymore. It's going to be split. We all know that. But the confusion is, I know it's difficult to navigate, especially some of your stocks might have got nailed for 30%. Some of your stocks might have gone up 20, 30% in the past couple of months, and you're all over the place. But that confusion and the back and forth and the split between bulls and bears, while confusing, is usually a healthy sign of the markets. I know you got CNBC on, a Fox Business on, or whatever you're watching, and you watched 20 guests yesterday. 10 said they're bullish and 10 said they're bearish. You're like, I don't know. You know what? Just own good quality names. Like, going to see a nice, a little bit push higher, not as high as we went, right? We're incredibly bullish. Remember, you got to look at the conditions. You can't say, Frank, you were really bullish like 8 weeks ago, and the market fell the first 2 weeks pretty sharply before rising. But we did have what? Insider buying near record highs back then. Sentiment indicators at all-time lows back then. I mean, it made sense for you to we clearly overshot. But right now, we're kind of in this market that the cream's going to rise to the top. Not everything is going to go higher, which we're seeing in the market. You're seeing it across the board. Some companies are getting nailed, and some companies are doing very, very well. So you listen to guys like me to separate the BS from the real companies. I'm not saying I get everything right, but there's going to be clear winners here. And you're probably going to see the market chug along pretty good, a little volatile through September until the next Fed meeting. So I'm not saying aggressively buy every single stock right now. Right now. I said 8 weeks ago. But right now, and you're looking at today and going forward, we're going to see separation of companies within industries that do well. We saw it during earnings season. There's companies that have pricing power that said, we're not seeing recession, we're seeing demand through the roof. And there's other companies saying, wow, supply chain concerns are still hurting us. It's getting global like Micron. But not all chip companies are seeing that. You're not seeing every single company in the industry go down, every single in the industry go up. We're seeing split, and that's what you want to see, because that makes it a stock picker's market. We pick the good names. And how do you find the good names? Focus on the ones with solid management teams. Those have been honest on the last couple of conference calls and not bullshitting you, which we've seen a ton of, especially when it came to supply chain concerns. Those that have pricing power, which isn't too hard to see. Look at their margins. Those where insiders are buying today, which you're not going to see as many. You see more sells than buys now because stocks have risen so much off their lows. But still, you have insiders buying. Focus on those names. If the insiders, especially if the stock is up well off its lows and insiders are buying. I'm not talking about 10% owners of funds. I'm talking about the CEOs, the CFOs, the COOs. If they're buying, that's a good sign. They know their company. I'm not talking about them buying 50,000 because they just got the job and they want to show support. Which you see if they hire a new CFO, he buys 100,000 shares. No, not one of those. Guys that have been there for 10, 15 years, whatever, 5 years or longer, that are buying. That's a good sign. They know the business and they see things in the future, contracts in the future, demand with their business. That's a very, very good sign. Look for that. It's not difficult to see that. You can find on many, many free sites. FinViz is one of them. Look at companies that are buying back their stock. This way you have that floor. Well, if it does fall, these guys are there to buy back a lot of that stock, which means they have a decent balance sheet. And even companies that are raising their dividend. Clear sign. You don't raise your dividend unless you believe your business is going to be good for the next 6 to 9 months. You're not going to raise your dividend. Unless you're one of those dividend aristocrats that have it's 50-year track record that they have to raise and they'll raise by a penny or whatever. I'm not talking about that. But guys that raise their dividend like 10%, 15%, 20%, companies are not going to raise their dividends unless they see a healthy outlook over the next 6 to 9 months. Especially since a lot of them during COVID suspended that dividend. So they're not under pressure to get that dividend back up and say, here's our dividend, we got to get. They're not under pressure. So for those companies raising that dividend, that's a very, very good sign. There's plenty of names that fit this profile. Of course, if you're looking at small caps, take out the dividend thing because you don't want small caps paying dividends all the time. I'd rather see growth out of small caps. Someone's covered all my life. That's what I talked about with Charles Payne on his show yesterday about small caps and breaking through and how they're still relatively cheap, still incredibly cheap compared to large caps.